Hello, in this video I'm going to show you my option spread strategy along with how you're closing out put. Basically, as you can see here, I have GoPro, which I bought I believe a couple weeks ago, and right now all you have to do to close this put, it's just like how you sell a call contract. As you see right here, it has +1. All you have to do is go to sell and then type in 1. Basically selling the contract that you have. Right here it says you're selling your right to sell 100 shares of GoPro, basically selling this contract, and just confirm that. And that should close out your put position. Well, let's wait for the confirmation. So in this video I want to show you my basic option spread strategy. First, let's go to, I see something interesting in Snapchat. As you can see here, there's about at the June 22nd, which is about 3 days away, 13, 1350, 1250, you see thousands of those call options being bought. I want to play this momentum trade, but I'm going to do it in a safer way, and I'm going to show you how right here. So if you type in Snapchat and if you go to options, as you can see that I want to pick a longer day. I don't want to do anything short term because that is way more risky, but I got a feeling that in the long run the fundamental of Snapchat will ultimately improve. So I think that in the long run Snapchat should be trading above $13 zone. So as you can see here that with $12 strike price, you are paying about $248, and $13 you're paying about $203. So if you don't have that kind of money, as you can see in my account right here, I only have $100. So if you're trading on a small account and then you don't want to put any more money, or you don't have any more money, the best thing you can do is basically do a spread. What that does, it actually reduce your risk, and I'm going to show you how here. So if you click on buy, select, and you want to buy an option, I'm going to do a little bit out of money option, close to the money of course, $13, and then I'm going to sell $14. As you can see here, I have buy expiration in January, should be on the same date. This is a basic vertical spread. As you can see, instead of paying I believe $2, instead of paying $203 for this $13 contract and then selling $167, I am, let's see, yep, basically right here just give me a confirmation that my put option has been sold or closed. So right here, as you can see that, let me just go back. Okay, right now I have $109 available. So right here, as you can see that my cost has been reduced to $36 instead of $200 if I were to buy this call contract alone. So right here you can just type in however many of wow, that's odd. Okay, let's do 36 cents. Okay, right here basically saying that you are buying the $13 call contract at $203, I believe, and then selling the $14 contract at $167. So basically the net, which is 36 cents or $36 per contract, is your ultimate cost. So let me confirm that, and hopefully in a few minutes, by the end of this video, this will actually go through. So that order took about half an hour to an hour because Snapchat has been trading sideways basically from the time I started making this video. So what I did was I went back and changed the option to 38 cents. As you can see here, 38 cents, and I had 2 contracts instead of 3 because on this account obviously the amount wasn't enough for 3 option spreads. As you can see right here, basically same thing, you buying the $13 and then selling the $14, and then you have the net is your ultimate cost. So let me show you how much you can make with this. So when you buy a call option, let's say for example the $13 strike price, which I believe cost $203 at the time I show you, basically you have unlimited gains. So basically the stock is set to go up and you will make money as it go up, and obviously if it go down you will lose the whole $200. So if you do an option spread like I just did, basically you put a cap on what you can earn, and you also put a cap on what you can lose, which is less risk, because instead of losing $203, you are only losing $37, because that's ultimately what the option spreads cost. And instead of unlimited profit, you are only making profit basically almost double your money. As you can see here, my max profit it's $63. And by the way, this is a Thinkorswim platform for DD Ameritrade. So basically, if you don't have it, it's free. So if you can just go create an account and give you all this information. So basically right here, as you can see, my max profit is $63 and my break-even stock price is $13.37. So let me show you this chart right here. So in order for me to get that max profit, the stock needs to go up to 14 and into the 15. So by that time, I will probably making $60, and as the time get closer to the expiration date, I will make that full $63. So for a small account, making basically spending $37 and doubling your money, it's not bad, because if you bought the stock itself, which is at $12.98, you can buy 8 or 9 of this stock, and in order for you to gain, let's say $60, the stock need to be up huge. I don't think Snapchat's gonna go into past $20 as well as the fundamental it is right now. By the end of this year, there's no way it can go to $20 unless something major happen, of course. But overall, I do think that Snapchat will be trading around $15, $16 level due to momentum. If you're technical, this isn't really much technical to be said about Snapchat, because as you can see, it's been trading sideways. So I'm just going off the momentum of the volume, people basically coming in and buy the stocks. So I'm gonna probably be in this for a couple weeks. This is an account I don't really pay attention to. I just buy something and just leave it there, like GoPro puts. I bought it for a couple of weeks and just left it there. So, but I don't think it'll go below to down to 10 again. And of course, this is my opinion. So as you can see right here, I have an option, and it will actually show you that it's a 2 debit spreads. So what that means is you basically buying the 13, selling the 14 calls, and you pay 37 cents or 38 cents in this case. So this is my basic option trading strategy. If I see something that's more risky and I want to take a conservative point, so I will make a spread out of that and to reduce my cost basis. And also I know that you'll put a cap on it, but I can, like I said, I can also buy more with the amount of money I got. So instead of buying the single call option, which is 208, I can even buy that in this account. So now I can buy 2 or 3 depending on how much I have in my account. So yeah, that will conclude this option spread video. I hope I make some clear points to how this option spread works. So if you have any questions, let me know. I'll try to respond it.